So let's talk about Genius brand. So this is ticker symbol GNUS, and this comes 2 weeks. I don't know if you guys remember, but 2 weeks ago, I made a video simply sharing my opinion about GNUS. And one of the things that I made super clear in this video is this was the same day that it pushed up to $11.73, and it pulled back over 60% in just a couple of minutes. What I wanted to share within that video is that GNUS, regardless of all the hype, regardless of what everyone else was saying, in my opinion, showed a lot of characteristics of pump and dumps. So obviously I run a very large YouTube channel. I wanted to make our beginner traders very aware of the risk involved. I do agree. I want to get one point across. I do agree that with trading lower cap stocks, you can make money. You can make money in any market. I can make money buying and reselling potato chips. That's not the point. The point is, yes, we all understand that you can make money trading penny stocks. You can make money trading momentum stocks. You can make money trading pump and dumps. You can make money trading crypto. You can make money doing anything. That's not the point. It's can you do it consistently, and why were so many people hyping GNUS? There's no question that it showed obvious signs of a pump and dump, and I want to share this with you and also talk about kind of like flags, red flags. If you are ever put in a similar situation where people are trying to convince you to trade something, that should put up a huge red flag. So I really hope that throughout this video, you learn something new, you get one step closer to your overall goal, and that I absolutely earn your thumbs up. So one of the first things that I want to cover is overall manipulation of volume and lack of history. So one of the first things that randomly began to happen is right around 5.4 to around 5.10. We saw that ticker symbol GNUS based off of the comparison of volume, right? This wasn't something that I was trading during the time, but we see that it goes from no volume to all of a sudden huge pushes, and the volume begins to become very present, right? It pushes up to highs of about 140. It pulls back to lows of sub $1. It consolidates. It has another run, right? You can see the increase of volume, pulls back, consolidates, another run, pulls back, consolidates. And then this is where it really began to catch a lot of attention. I just remember in the group chats, a lot of people who focus on lower cap stocks or penny stocks were really focusing on GNUS. And it made sense, right? What I want you to understand is there is nothing wrong with making money while something has momentum as a trade. What I find very discouraging is where you see that there are beginner traders or beginner investors, and you try to pitch them the idea that GNUS is a long-term investment. The huge red flag is, first of all, it's demand of volume, right? You can see that now there is present volume, right? There was no volume, and now it's here. So there's obvious forms of manipulation, right? It could be due to direct marketing of just brand awareness for GNUS or the Genius brand, right? There were so many articles being pumped and shared, and it was just a trendy stock. And the more money people made, right? And the more the price pushed up, the more popular it became because of how it went from trading at around 30 cents all the way up to highs of $11.73, which is, pretty much almost 4,000% return within a very short period of time. Again, I am here to remind you that you need to learn how to walk before you run. And I do agree that it is possible. Of course it is. When there's transactions happening, of course, people can make a lot of money during these pump and dumps. That's not the point. The point is understand your intention with this trade and understand the risk involved. That's all I want you to make sure you understand before you take your next trade. If you see value in the high risk, high reward approach with penny stocks or pump and dumps, all power to you. It's definitely not my niche, right? It's not my focus. I just don't work well with it. But I'm never here to discourage you or to try to convince you that, hey, you should not. I just want you to be informed enough of the risk involved, right? What I want to cover is huge percentage growth within a very short period of time. That should be a red flag, right? When things are too good to be true. I'm not here to say that things can't gap up and be legitimate. You just have to understand the way things work. When something is in high demand, when something is very hyped up, it's very trendy, there is an influx, right, of demand for a very short period of time. And then what happens? It corrects itself. So you just need to understand that, hey, when things are becoming too good to be true, it literally doubled in price in one day. Maybe it's not the worst idea to be a little bit more on the conservative side. Maybe follow with a tighter stop loss. Maybe trading with a smaller dollar amount, right? If things begin to go south, if it actually begins to pull back, especially as it began to get halted nonstop. And one of the things that really cracked me up about this is, I'm here to share my opinion just as you are. You can share your opinion in the comment section on how people can better prepare and better inform themselves when something is a pump and dump, right? And they can try to approach it as a trade versus people are literally trying to sell you the idea that, I don't know how many times I saw this. I had to remove people from our group chat because I absolutely hate this analogy of people saying that, how do you think Amazon, how do you think Netflix started? What? The idea of how do you think Amazon and Netflix started using two extremely reputable companies that became uber successful, and you are going to take a pump and dump that is very obvious, that has, again, lack of history. It came out of nowhere. It has so much to prove, right? How do you think Amazon and Netflix started? Why can't this go to 1,000? Why can't this go to $100 a share? Why? Well, I'm not saying that it can't, but if you are trying to convince me on why I should invest in a stock based off of completely different companies and their, again, very rare and unique success, if that is your point, your pitch that you are trying to get across to get other people to jump on into the hype, that is a huge, huge red flag. And I will ban you every single time I see that comment, because there's no meat in that example. There's no meat on that reasoning behind why you should put your money in something that is pumped over 4,000% within 2 months. It's absolutely hilarious. When people try to convince you on where you should put your money, that should be a huge red flag, right? And the thing that I want to highlight is now more in the general aspect. Every trade comes at some form of risk. This is something that you have to understand. This is not investing in the stock market when you're taking advantage of lower cap stocks. You are trading in the stock market, right? So you need to make sure that your overall upside or downside is something that you take into consideration. If every single time, think about this, if every single time you take a trade and all you're thinking about is, okay, if I buy here, how much money can I make? And you do not think about the loss or the risk management or how much money you can lose, I can guarantee you that mindset, big picture, over time is going to end up biting you in the butt. Share in the comments. If you do not take risk management into consideration and focus on quality over quantity, you will end up losing money long term in the stock market. It's just, again, it's great to make money in the stock market, but that's not the difficult part. When you're making money, it's easy to hold something that's making you money. It's difficult when things begin to go south, right? And you begin to lose money and knowing when to cut losses and not bag hold. Trust me, we've all been there. We've all taken hefty losses. I'm not here to say I'm better than anyone else. We're all human. We all make those mistakes. But the idea is to learn from them and to grow from it. So especially with these higher risk penny stocks and pump and dumps, you need to have a greater form of self-discipline and risk management when things begin to go south, because it's not like you can just lose 5%, 10% within a day. And the example that I want to give you is from $11.73 to lows of $4.23. That's losing 63% of the position in just a matter of minutes. 63%. Just think about that. If you had $100 in your account, you now have less than $50. If you had $1,000, you now have less than $500. Every single time that you take a position, you need to have some form of risk management in place. And you can make any excuse. Oh, well, I don't like stop losses. oh, well, I don't like getting stop lossed out because there's market makers and they could see where your stop loss is at. I've heard literally every excuse in the book. It doesn't matter. If you do not have any form of stop loss, if you lose more money than you anticipated, that is 100% your fault. And if you cannot own up and accept the red days, then you have not earned the green days. And I think we can all mutually agree on that. The stock market is not an easy market to be successful in. Yet alone, it's not a market where you want to be hopeful in. You need to have a plan. You need to have structure, and you are the only person that can hold yourself accountable the next time you take a trade. And I want to follow up with, again, learning how to manage risk. I think that we did a pretty good job right now explaining on how to cover that, right? Every single time that you enter a position, one of the things that I try to preach, right? We can never tell people what to do, but one of the things that we always try to encourage people to do is to have a plan. Every time that before you take a trade, especially when you're just getting started, take time, plan it out. Where are you buying? Where are you selling? Where are you going to be cutting losses? And I'm not saying with these penny stocks, but with anything, with an investment, when it comes down to, even a short-term swing trade, you want to have some form of plan or intention, right? Okay, well, I see this much potential versus this much downside. So it's all planned and premeditated and you have it all laid out. So if you planned it all out and you're like, wow, actually it doesn't make much sense because the upside does not outweigh the downside, this probably isn't the best trade, then guess what? You just saved yourself a day trade that could have gone south. Best of both worlds, right? The last thing is, again, I want to repeat this, never to be convinced what you should trade. You should understand the opportunity. And this is the most broad and generic way of how I could explain it. It's, yes, I am actually encouraging you that you need to take time to understand what to do. It's not like someone needs to tie your shoe every single day because you don't know how, and you're just going to live like that for the rest of your life. You need to learn how to tie your shoe yourself. Self-sufficiency. That's the goal. I wake up every single day and I don't have people telling me, hey, Ricky, where should I buy? Where should I sell? Where should I cut losses? Ask yourself, what's your goal? What's your end goal with learning how to trade? Is it to be told what to do? Is that really what you think is going to lead to your success, to be told what to do? Or does it actually make sense to practice, put in the hard work, put in the time until it makes sense of understanding where to buy and where to sell? And I'm not saying with this, right? But with the example that I want to give you is never to be convinced. Never to be convinced what to trade. The reason I'm saying that is because when these pump and dumps and these penny stocks become very trendy, right? There was, I think, a very popular one this week, and it was ticker symbol CARV. There was, again, people trying to convince other traders, hey, you should put your money in this. I'm not here to discredit the opportunity. That's not the point. The point is when you're trying to convince someone where they should put their money, they have no understanding of where they're buying, where they're selling, and where they're cutting losses. They have no understanding of the opportunity, therefore they have no understanding of the risk involved. So going in blindly is, in my opinion, one of the worst things that you can do. And one of the things that I try to share in all of my videos, right, is when I share what it is that I do, you can watch any of my videos. Yesterday I made over $700. I trade UGAS and DGAS almost every single day. Get this, right? I will never, ever in my life encourage people to trade what I trade. I will share what I do, how I do it, and the outcome, just like I did yesterday, right? $700 profit. I traded DGAS, I traded UGAS. I made a couple mistakes, but I still walked away with $700 profit. I talk about the opportunity. I talk about how I did it. I talk about everything. So I can lay it all out and you can make up your own choice. The idea to have in mind is you should never be convinced where you should put your money. You should understand the concept enough and the opportunity enough that it makes sense to you that, hey, I'm going to buy here, sell here, that there's some form of understanding before the actual trade takes place. If you're on StockTwits, if you're part of a group on Facebook, if you're part of a group in person or a group chat, you should never, in my opinion, be told or convinced where to put your money. You worked hard for your money, so you are the final decision maker on where to put it. Because guess what? Whether you win or lose, it is on you. And ask yourself, is the goal to always be told what to do, or is your goal to learn how to trade or invest to be able to do this on your own self-sufficiently. I'll leave you with that. I really hope that I earned your thumbs up. Don't forget to smash that like button. Also, if you guys haven't stayed connected with us, we do run the largest Facebook group in the world with over 280,000 members. That's that first link down below. So don't forget to check that out. Subscribe to the YouTube channel, turn on those post notifications so you get alerted when it is that we go live. We have over 2,000 videos on YouTube. And please don't even just stop with our YouTube channel. There's so many other talented people on YouTube that you can learn different ways on how to trade. I am one of just many different options. I really do appreciate you guys' time. And like always, let's make sure that in the year on green now. Take it easy, team.